Welcome to Investors Insights. Our topic today is cash on hand. I'm excited to share this vlog with you, and the information we provide today will continue throughout the week in our social media and other ways that we communicate with our clients. With me today is my distinguished colleagues who I thoroughly enjoy working with as well as debating, Bobby Norman and Adam Van Zandt. Guys, thoroughly enjoyed this morning's discussion. This is a pivotal week, an important week that a lot of people don't realize. So, Bobby, why don't you start us off because you got everyone's attention first thing this morning. So go ahead.
Yeah, Greg, a lot going on. This week could be the most important week of the summer. We've got the busiest week of corporate earnings, including a number of big tech firms reporting earnings. So far, second quarter earnings season has been stronger than expected, as 88% of the S&P 500 companies have reported positive earnings per share surprises. So on Tuesday, Wednesday, we got the Federal Reserve will be meeting, and the market will be reactive to what the Fed says about their tapering plans. Remember, the Fed is buying $120 billion worth of bonds each month. So investors will be paying close attention to see what the Fed has planned. And then on Thursday, we've got the second quarter GDP report, which is expected to show very strong growth in the second quarter. So, but I also want to point out something that we've been watching over the past few months.
Okay.
We've noticed that this year, most of the market pullbacks have been short-lived as investors have come in to buy the dips. Look at this chart going back to 2010. Flows into equity ETFs have hit a record this year as investors continue buying any dips that occur. We also know that there's around $4.5 trillion in individual money market accounts and over $17 trillion on deposit with commercial banks. So there is a lot of what we call dry powder still out there that can be deployed to buy the dips if the market trades back. And I think it's important to point this out as the Delta variant continues to be a worry. An example of this happened last week. We saw a big sell-off on Monday due to COVID concerns, but we saw buyers came in and bought the dip on Monday, which led to a rally the rest of the week. So we're watching the concerns around COVID carefully, but we're really impressed with the amount of money being used to buy the dips.
No, I think that's great insight, and there is a lot of capital on the sidelines ready to come in. Other topics that we'll be addressing as the weeks progress, the infrastructure bill, still big debates on that. The debt ceiling, is an issue that they always draw out and decide at the last minute. Then also from the standpoint we were discussing earlier this morning, Jerome Powell's reappointment as chairman of the Fed. That's going to become a topic if that continues to linger out there. But with that, and that's what we wanted to reassure people, there's still a lot of cash on hand, money that can come into the markets to take advantage of corporate earnings and this economy as it continues to move forward so strong. And Adam, your technical analysis confirms a lot of things about the strength of the market. Talk about that in relation to what we saw last week and as we move forward into this week.
Thanks, Greg, and I appreciate it. And as you and Bobby alluded to, you gave a lot of things that are coming up this week along with the next couple of weeks. I kind of want to recap, and Bobby talked about it a little bit, that Monday of last week, we saw a large pullback. In fact, we saw the major indices all pulled back over 1%. Of course, we saw the rally, as Bobby discussed, and that put us at a Friday S&P close of 4,411. That gives us a new resistance level of 4,440. Also a new support level of 4,380. Last week, I talked about the longer term analysis from a technical standpoint. So I did want to go over the 200-day moving average. That comes in at 3,914. So we finally see it push over that 3,900 mark. And that kind of points us in the direction that we might be seeing a bullish pattern in the markets moving forward.
Yeah, and that's why we give these indicators, these resistance and support levels. So when volatility does hit, or as Bobby talked about, we have a trade back in the market, clients can watch these numbers and the indices to determine, hey, are we starting to see some weakness here? We're trying to share as much information as possible. So when you watch your portfolio, you get on the account view 24/7, you can look at it. And if you see some volatility, you see news on the market, you know where we're coming from in relation to these trade backs. So we're going to keep you informed. It's hard to believe we're on the verge of finishing the 7th month of 2021, and we're going to move forward in this year. It's not going to be dull, and we're excited and appreciative of all of you as clients who are with us, believe in us as we watch your financial blueprints and update them, as well as your portfolio strategies. We hope you have a great week, and we're going to keep you updated, and hopefully this information has been valuable to you. Take care.